been kind of all over the place already today. We're positive across the board except for the Russell, as you see here. Barely so, though, as economic data comes in better than expected almost across the board, whether it was GDP, durables, jobless claims, new home sales. And it's one reason, Anastasia, why Deutsche Bank is still looking for this rally to continue. The idea that if there's going to be a recession, it's not coming for 6 months or so. They suggest that the S&P could get to 4,500. What do you think?
Well, seems like a stretch. I think 4,200 is probably where I would be most comfortable saying we can get to. But look, I can't deny that there's been definitely some positive developments here. And the fact that the markets pretty much shook off the Microsoft development and the guidance and kind of the downbeat commentary tells you that the markets are not concerned about the next couple of quarters. They're not concerned about the slowdown. They're more optimistic about what the back half of the year looks like. And Scott, you know, there's reasons to be optimistic on the economy. We have had the slowdown because you don't want to invest when the PMI is running at 60. You want to invest when the PMIs are below 50, or in this case, 46. And by the way, the manufacturing PMI, the services PMI, they actually ticked up. So that's great news. We've got consumer confidence that's actually been picking up as well as inflation has been coming down. And that brings me to probably the biggest positive is that inflation has been coming down across the board. And if we're 50 basis points away from the end of the Fed rate hiking cycle, all of this is pretty good news for the economy. And the last thing I'll say, Scott, the markets have priced in a chunk of the slowdown. If you think earnings need to be down by 13% in a recessionary scenario, guess what? For 2023, they're down 10% already. So we're a long way there.
Josh, does this feel to you like a market that still wants to move higher based on the kind of action that Anastasia was just mentioning, whether it's Microsoft and fighting its way back or some of the other action that we've seen too?
Well, I think it's clearly wants to move higher, but let's keep in mind that can change on a dime. The market started off last year wanting to move higher, and then on January 3rd, it changed its mind. So I don't want us to extrapolate too much from what's been happening over the last week, but it's undeniable. This has been, I think, the best 5-day stretch in maybe 6 months or 5 months. And when you have price action like this, no matter how bearish you are or no matter how cautious you want to be, you do have to stop and just ask yourself, what am I missing or what might go right? So 2 things. The first is the reopening of China has been very bullish for the commodity trade, the energy trade, obviously the casino stocks. LVS looks incredible. Like that's one component of this. The second component is whatever you want to say about valuations, you absolutely must nod your head to the fact that our top 500 corporations here in the United States have just done an incredible job navigating the environment that we're in. And every time we go through a quarterly earnings season, we get a reminder of just how good these 500 companies are. The last thing I would mention, there was a really big rebalance that took place for the S&P Dow Jones indices, which a lot of money is following these indices, like $1 trillion plus. And some notable things took place because about a third of the index turned over. And here's one very extreme example. Energy went from being 1% to 8%, a much, much, much bigger weighting than where it was. A lot of the big tech that had driven the market for 5 years took a big step back. Some of the big tech giants are now even considered as value stocks based on the way they're categorized in these indices. Don't discount the impact of that because, again, so many allocation decisions are being made versus those benchmarks. Whether people want to admit it or not, that's the benchmark that they're chasing. So I think when you look at that, and then I know we're going to talk about energy in a little while, these companies, the biggest energy companies, Exxon, Chevron, Shell, Total Energies, BP, they're going to have a combined $200 billion in 2022 profit by the time we get through all of their Q4 earnings report. That is 50% higher than the previous record. And these are now, once again, monster stocks. ExxonMobil is hitting a new high right now. Stock is up 60% in the last year, 331% off its COVID low from March of 2020. So these stocks matter a lot more now. A year ago, they were barely relevant, and it was all about Apple, Microsoft. It's not all about those names anymore. There are new names that are meaningful, and those companies fundamentally are in really good shape.